Hello and welcome to episode 2 of Smaulgld Subscribers Sound Off. Today we have with us Rob Gibbs, a property preservation specialist, and we're going to get into what that is. Rob is one of the few individuals who perhaps has benefited immensely from the financial crisis of 2008. Rob, welcome to the show. How are you doing?
I'm doing quite well, thank you.
Oh, excellent, Rob. Rob,
how about yourself?
Oh, I'm doing fabulous this evening, Rob. And how long have you been a Smaulgld subscriber?
For the last year.
Oh, it's good to have you for about a year now. And Rob, when did you become interested in economics and the precious metals markets in general?
That would be 3 winters ago. I stumbled onto a Gregory Mannarino podcast, and he was hammering the point that silver's the most undervalued asset in the market and to buy silver. And then from there, I just started picking up new people. Dave from X22 was the second one. And then Jason Burek from Wall Street from Main Street, then Sean from SGT Report. Then I started discovering that the guests would be on one show, would end up on another. Then I started following the guests on YouTube, and then now my podcasts are quite numerous.
Well, you've got a nice list of people that you follow there. And what is your view right now on, before we get into the real estate aspects, on the state of the economy and the prices of precious metals? I know you mentioned Greg Mannarino. He's not the only one who's said and has been saying for years that silver is severely undervalued. What's your view on the precious metals markets?
For me, it's a whole new thing. And so when it comes to the history of it, like, gold being banned from ownership, and then the suppression that goes on in the markets by issuing more paper than there is physical. I mean, I don't know. They can pretty much do whatever they want. I mean, the system's been operating this way for however long it has been, and that seems to be their specialty. And I know everyone's, saying, oh, there's going to be a default in the COMEX, and this is going to happen, that's going to happen. But I would believe that people who are pulling the strings behind the scene pretty much have it in control, as much as it appears, or people think that they don't.
Well, that seems to be blasphemy, because normally you hear people saying on a lot of the podcasts that the powers that be are losing control, and now logically they should be, because you wouldn't think you'd be able to keep this up. But it seems to me they have a firm grip on what's going on. Although, what do you think? Do they have the same type of grip on the cryptocurrencies? Are you involved with those at all?
I am involved in the cryptocurrency. That's been very exciting for me. I would say I mean, as far as a free market with the supply and demand, bidding up the price, I don't see why they wouldn't be able to, do the pump and dumps with enough, put enough money into it, pump up the price, get people to chase it up, and then pull out.
I suppose they could do that, but one thing they probably can't do is the naked shorting that they get away with on the COMEX.
Until they open up a crypto COMEX, if you will.
Sure. Well, it's interesting. One of the reasons that gold ETF didn't get off the ground was because there wasn't in a sense, a place where the SEC could monitor a place like the COMEX. They were all traded on these unregulated exchanges in China, and I guess they didn't like the fact that they really couldn't tell or control what was going on there. Well, let's shift gears over to now the property. What were you doing in 2008 when the financial crisis, which was largely created because of the real estate market collapsing and all of the credit default swaps going under, what were you doing in 2008?
I wasn't in the property preservation business quite yet. I got into it about 5 years ago, and from there, I just started my own company. This is our second year operating in that industry. So as far as, and I'm not a property owner, so I really wasn't affected. Now my sister, and the pastor at my church I remember them being quite distressed because their house had lost tremendous value and they were locked into the price that they had agreed to buy it at before the devaluation occurred. And I personally don't know anyone who lost their retirement or anything of that nature. Like you hear, people saying, "Oh, they got wiped out," and, people haven't recovered.
Right.
Those people weren't in my circles.
And the people that were in your circles, when the financial crisis hit and they saw their home prices drop precipitously, did they welcome? I mean, a lot of in the alternative financial community were dead set against the bailouts, dead set against QE. And those programs have boosted property prices back to where they were. What were the impressions of the people at the time? Were they looking for that type of bailout and help? Did they welcome it?
Well, I'm sure they welcomed it in the sense that it brought their, property value back
Right.
up. But there wasn't any, let's grab pitchforks and torches and march on Washington, any kind of sentiment. People were just dealing with it, more concerned with other real life stuff, raising the kids, putting food on the table, paying the bills, paying on your devalued home.
Well, that raises an interesting point, Rob, because you mentioned, you see all these things happening in the financial markets, and most people are not paying attention. And things that seem obvious to us because we tune into all these channels, why do you think that people either don't pay attention? Is it over their heads or because they're fed a different narrative?
I think the first thing would be the luxury of the free time to pursue those interests. And I could see, people are caught up in their everyday, and the financial markets, can be intimidating, can be very easily over someone's head. I'm sure a lot of people don't know what the Federal Reserve is, what
Right.
the Federal Reserve does, that they're not federal at all. But it's just the daily grind, putting food on the table, paying the bills, raising the kids. And then you get so bombarded with all this garbage that's on television. I mean, it's easy to I don't know, like be deprogrammed or
Right.
unplugged from reality. What I call reality, that the interests that we share, that reality.
Well, the issue is, I believe, correct me if I'm wrong, is we in our community all kind of understand and for the most part believe the same things, and we think we have these vast numbers, but isn't there a larger group of people out there that actually could care less?
Oh, absolutely. Yeah, that's my point. They could care less.
Yeah, and do you think there could be any change in the financial system if there's only a small group of people who kind of complain on YouTube and Twitter about it?
No, I don't think that it's big enough to impact any course of direction or change any policy, because we're outnumbered and we're outspent, and people, they're used to the status quo. They want the nuclear family life, if you will,
And
the American dream.
we want that as well. I guess we see, however, these policies put that American dream under attack, and it just seems to me that we're all patting ourselves on the back for doing such a wonderful job of getting information out there, and it is getting out there. But I think there's a sense of frustration because what seems logical, which should have happened in the last 7 or 8 years, has not happened. Do you think that they can continue to boost the markets and suppress the metals prices for another year, 2, 5 years?
They'll continue to do it until they can't. I don't know what would cause. I'm not saying that no, I expect it not to last much longer, whether that's 1 year, 3 years, 5 years.
Right.
It can't go on forever because it bottom line, mathematically impossible.
Right. Okay, so let's say it doesn't go on forever. But what happens when it stops? I think a lot of people have different views, whether there's going to be a reset, whether gold will be involved in backing currencies, whether they'll just recreate a new fiat system using SDRs. What do you think, if there was some type of a real financial event would be the reaction, and what impact would that have on us?
The reaction would be based on how people were impacted in wherever their station in life is, as far as the, your EBT cards, that, yes, that getting cut off, I could see major, major reaction. But as far as what would happen, how it would happen, the podcast that you did about hedging your bets, or hedging your prejudices, that was awesome. That really kind of like grounded me into reality to take a look at what I thought I knew, or what I thought I believed, and it just made me step back. Anything could happen. Say, I stack, physical metals, then they make them illegal, or I dump all my money in crypto, then they freeze that, because unless everyone's accepting crypto as a currency for trade, your money's trapped between the exchange and your bank account, or your debit card, or your ACH, your wire transfer. So, I don't know. It would be interesting. I think it'd be smart to, not to sound like, a gloom and doomer, like crazy tinfoil hat. I mean, have some food and water, have a little bit of cash, have a little bit of, precious metals. Just be prepared for anything.
I think it's refreshing to hear someone say they don't know. I mean, you don't hear that. You hear people say they know something's going to happen. It's going to happen. It's going to happen. It's going to happen next week. Then it doesn't happen. No humility whatsoever. They're back out the next day. It's going to happen. It's going to happen. Now, logically, we know that these things should happen, but we also know that they haven't happened. So you're right. Be prepared. I did a blog post the other day, Rob, on is cognac and whiskey is money. If you had invested $1,000 in cognac or whiskey 5 years ago, you'd be better off than if you're holding a stack of silver. And who would have thought that would have been the case? So
yeah, that reminded me of, I heard a podcast, I think it was on Finance and Liberty, Ann Barnhart. Oh, that lady is awesome. I love her. She was talking about how people were using Tide laundry detergent as a form of currency in a community.
Small boxes. Well, you need that more. The other thing about, when I get your thoughts on this, in a real collapse situation, silver and gold are not going to be as valuable as actual raw foodstuffs, liquor, playing cards, laundry detergent, things that people need. Unless you find somebody who's just overstocked with supplies, why would you want silver? What are you going to do with it? Because in a total collapse, there's nothing to buy other than essentials. And you're going to want the essentials, not the silver or gold. So I think, we really want to see not a collapse. If you're holding silver, I hope you're not hoping for a collapse, because ask the people in Venezuela if they wanted a collapse in their economy, and that they're excited that they now have silver, and there's riots going on, and there's food strikes and hunger. Rob, let's talk about what you've been doing in your business in property preservation. Can you give the listeners kind of the scope of what's gone on and is still going on in the housing industry in your area?
A lot of foreclosures. What my company does is we work on behalf of the banks, all the major ones that you hear in the headlines. A property will go into foreclosure, and then there's a pre-sale aspect of it, and then there's a post-sale aspect of it. The pre-sale aspect of it, the property former owner has certain rights and access to the property until it goes into a post-sale state. That's when the bank takes back control of the property in their name. What we do is we'll come in and we'll assess the damages in the household, and we'll put bids in to repair them, because the houses have to be in what's considered a habitable state, which means that it has to have running water, toilet, electricity, heat. It doesn't matter if the living room is blown to smithereens, like someone had a suicide vest on. They don't care about that. They want it in habitable condition. No active water leaks. In a sound condition. And the thing that I've noticed, and I'll have neighbors come up to me all the time and talk to me, and I'll ask them, how long have they been out? and they'll ask me, is it up for sale? Is it going for, are they going to be renting it out? And a lot of these houses, I would say, great 90-something% of them don't go back on the market. They just sit on the street. We come and maintain them. And houses that by all rights should be demolished and razed to the ground, they'll let those sit up, because a house on paper, you can't see what it looks like. You just know that it has a value to the bank, which allows them to have more money to play with on the other side of the balance sheet. So a house that should be condemned on paper is worth a lot more than a vacant lot.
I see. So what the bank does, correct me if I'm wrong, is they keep the house in that condition rather than demolish it to keep the asset price, and they even find it worthwhile to pay the property taxes to do that. Is that correct?
Correct.
So the bank's balance sheet looks good, but if anyone took a look at those assets, they'd realize that, well, don't they have a certain accounting rule that allows them to do that?
I believe so, where they have it on this side of the balance sheet, and then they have the freedom, flexibility, and forthwith whatever they want to do on the other side with that.
So you know what you're reminding me of is that those that create debt are kind of in control, and that leads me to what we talked about in the pre-interview. United States is good at doing what?
Spending money we don't have.
By issuing debt. So
correct.
And the United States issues more debt than anyone in the world, which you would think would make it the weakest country, but it's a function that it can issue the most debt because it's the most powerful. And you raised an interesting question about what happens if countries no longer want to buy our debt. Can you fill us in on what gave you that thought?
Well, I know China and Russia are working on their Silk Road initiative. I know there was the AIIB investment bank.
That's the Asian
Infrastructure Investment Bank.
For our listeners.
And then there was they're developing their alternate to the SWIFT payment system.
CIS.
Yeah, and then let's see. So you got and then so why? My biggest concern is now that we hit this debt ceiling, and then they just expanded it into the fall. We're 19 point something trillion dollars in debt. So what happens when countries say, you know what, we don't want to buy America's debt, because we're going to have to issue new debt to fund us for the next couple of years, and the deficit's $1 trillion, going to be $2 trillion a year. I don't know, but for me, if I was another country, I'd be like, I'm good with that. I don't want to buy your bonds. You guys are already $20 trillion in debt, and you're burning money,
right?
Going through money like water. And so what happens when people say, you know what, hey, we're good with that. We don't want your debt. We're doing our own thing over here.
Well, what happens then, I believe, is that the Silk Road, if you remember, they're talking about issuing local currencies and funding their own infrastructure projects along the Silk Road in local currencies, Chinese yuan. And you're right, they would not have a need for U.S. debt. Now, this is all new infrastructure spending, so it won't take away from the appetite of the existing debt holders who buy and hold debt. But of course, there's a limit, Rob, of how much debt, or they call them assets on the balance sheet when you have a U.S. Treasury is considered an asset, that these countries can have. And we only have to look at a country called Japan. And do you know how Japan finances its deficit spending? It's called the Bank of Japan.
Yes.
They buy they buy like almost all the bonds that the government issues. So the issue there is, you think, oh, we're going to have this problem when no one wants to buy our debt. Well, there's a thing called the Federal Reserve, right? And you say, well, that would create inflation. But is there inflation in Japan? Now, I'm stunned by all this, Robin. These are great questions, and you would think that if the Bank of Japan was buying all of the debt that Japan issued, that the country would be this biggest basket case. And it's not. The yen is actually considered a safe haven currency, in part because the Bank of Japan is sitting there ready, willing, and able to buy it. So,
but the one thing that Japan has going for it is they're plugged in with us.
Mm-hmm.
You know, so you've got, you know, Japan, you've got the European Union, you've got the United States, and they're all plugged into each other. They're all playing games, a shell game,
right,
with their currencies. But what happens when the other half of the world says, you know what, you know, it will trade with you if you want to do things our way, you know, sane and in a sound manner.
Well, you're right. And you know when that happens is when the GDP of those nations along the Silk Road are somewhat equal to the U.S. The reason that all this funding is happening is because basically Kazakhstan and all the countries along the Silk Road don't have much in the way of GDP. The largest trading partners in the world for China are not along the Silk Road. They are the European Union, number one, and then the United States, number two. What China's trying to do, I think, Rob, is to create a zone where they have a viable economic area, because the BRICS in and of themselves are nothing. If you take China out of the BRICS, it's basically Brazil, Russia, India, and South Africa.
South America.
South Africa. And those nations aren't that. I mean, India should be far more ahead than it is. So the threat of the BRICS developing is a big one, and they need financing to do it. So I'm not sure where that's all going to head. But back to precious metals, because precious metals to me make the most sense of any investment. You mentioned Greg Manorino mentioned this. I mean, I can mention just about anybody. Mike Maloney, who's that guy?
I like Mike.
Mike Kawasaki, Sean, all these guys, Andy, they all mention precious metals, Holter, as what you should have to protect yourself. And we're seeing, yes, we know the manipulation is the issue, but Rob, how much longer do we got to wait?
until we don't. And then who's going to recognize the value of precious metals? Just the handful of us in our community, and the real world say, what do I posed this question to a buddy of mine. He's a carpenter, and he was helping me on this job, and I was kind of giving him a rundown of what's going on. We were making conversation in the car, and I said, probably be a good idea to, you know, maybe like buy some silver because it's real cheap, maybe, you know, some gold. He said, well, why would I want that in an economic collapse? He said, I'd want a sandwich. He's like, that's what I need, a sandwich.
Well, maybe the answer is not an economic collapse, but just that things get bad. I think that's the problem. We've been selling this as collapse. I don't think silver and gold are as good in the collapse as they are in just a high inflation, bad economy. And I was talking to Derek Bronson earlier. We did the first Smaulgld subscriber sound off, and he mentioned a similar anecdote to yours. He's talking to a friend, and he said, how about you buy some gold? And I'm like, why would I want that? And because it's this whole media and financial media trashes gold so much. And that, what do you think it has? Do you think that people are influenced more by the alternative financial media or by the financial media at the current state of play, Rob?
Mainstream financial media, because they have the floor. They dominate the airwaves, and people trust the mainstream.
You know, that sounds wrong, but that's not, because people we know don't. But,
right. But
well, no,
we're
not
a
even
small
people
community.
you know. Your carpenter friend, you know him, and he thinks you're nuts for buying silver. You know, and I think that's the main thing. And it's one by one. You convince people, you talk to them, you explain to them. But really, if they control the narrative, it's very difficult. They can make up seem down and down seem up. It's truly Orwellian what's going on. And my question to you is, do you think that cryptocurrencies are kind of, you know, we were talking about that, are you hedged against your confirmation bias? Do cryptos kind of provide somewhat of a hedge, or does real estate provide somewhat of a hedge, or even investing in the stock market provide a hedge against your own confirmation bias in favor of precious metals?
To a certain extent, I guess it would depend on the individual, because the bottom line is the government can come in and declare confiscation like they did of gold.
Mm-hmm.
You know, they could say, you know what, there is going to be no crypto. You got to turn it in, and we're going to issue a blockchain currency. You have to use this, or we're going to confiscate your real estate, national security, whatever they want to make up. They can do whatever they want, and they do whatever they want, and they get away with it. They just do it slowly and surely, slowly, a little bit at a time.
Rob, it sounds like what you're saying is there should be a little bit of playing along here with what they want. Because if you played along the last 8 years, you got rewarded. If you bought stocks, if you bought ridiculous stocks like Snapchat, or, you know, these stocks with no earnings, you were rewarded. If you bought real estate, you know, you were rewarded. Where you're not rewarded is where they don't want you to have your money. And if they don't want you to have your money in these things, they find a way to make it not economically advantageous. But they haven't seemed to have done that with the cryptocurrencies. Are you familiar with any of them other than Bitcoin? I believe you know something about, what's the one with the Ethereum?
Ethereum. Yeah, I bought into that. I heard a guy on, I believe it was Wall Street from Main Street. He was, I think it was, he bought in when it was like 25 cents. It was like maybe $1 and some change. And I bought in when it was going from $9 to $10. And I just cashed out and bought a 2002 Mustang.
Nice. I remember you sent me pictures of that. That was beautiful. Well, it's good to see someone, you know, as I mentioned at the top of the show, you've benefited from the financial crisis, not on purpose, but because it's given you a business in the real estate sector. And, you know, I don't think cryptocurrencies, and I think if you read the white paper of Bitcoin by Satoshi, it was created because of we have such profligate central banking and creating money out of thin air. So cryptos really came about as a result, as a reaction to the financial crisis. And at least,
but now there's so many of them. They're just popping up. If you're a programmer, you can code one in 20 minutes, a half hour on your computer.
But the question is, can you sell it?
Right. That's the bottom line. But yeah, there's just, and who knows, you know, where it's going to go. I mean, look at, you know, the beginning of the internet with, what was it, Netscape? You know, that was the big browser, and there was AOL.
Pointcast. Do you remember Pointcast?
Yes.
That went nowhere fast after a while. Yeah, you never know with these things, but I guess it highlights that you have to be nimble. It used to be, unfortunately for today, but it used to be you saved your money. Maybe you saved your money in gold or silver or even in dollars in a bank account. And when you retired, you had your money. But now, if you save your money in gold or silver in the bank account for the last 10 years, you lost value, which is just astounding to me that's happened.
Yeah. Oh. And I see, I'm always at Home Depot buying supplies for these houses, and there is no lack of work. I mean, I've got work more than I can do as far as the eye can see in this industry. I mean, I work from April to October. I work 7 days a week. I might get a day off once a month if I'm lucky. But I was at Home Depot the other day, and there was a gentleman who should have been retired. He was well into retirement age, and he was all shaky. Like, he obviously had, you know, some kind of physical condition, and it just broke my heart to see this guy working in Home Depot for minimum wage.
No, I understand that. And, you know, you want to talk about inflation. Where the inflation is, Rob, is in, it used to take maybe, you know, a couple $100,000 saved to live off of the interest. Well, now you need $5-10 million to save off the interest. And that's the real inflation, because they don't pay interest. And, you know, we're in a new world where it pays to speculate. You know, it pays to buy a cryptocurrency. It pays to buy a new IPO that's never made money and actually says, like Snapchat, we don't think we ever can make money. So they've turned the whole financial system on its head. Rob, I want to thank you very much for taking time out of your busy schedule to join us here on the Smaulgld channel. Please, let's do this again soon. And thank you very much, Rob.
Well, thank you for having me. It was my pleasure.
Excellent.
Really appreciate you.
Excellent. We'll talk to you soon.
All right. Thank you.